Hey everyone, welcome and welcome back to my channel once again. This is your friend Abhishek, but not a financial advisor. So today's topic is going to be quite an important topic. So there are two topics which I would like to cover here. One is what I would like to show you guys and tell you guys and inform you guys what is actually happening with the stock market. And second is on the NIO stock update, because this topic is on request, from my followers. So let's talk about the market. So what is actually happening? So we can see that today the European stock market is also getting a hard hit. So Euro stock 60 fell by almost 2%, France 40 fell by almost 2%, Germany 40 fell by almost 2%, and even Italy 40 fell by almost 2%. So we can see that the European market is also getting a hard hit. So is the US market and also the crypto. So those who were actually thinking before that crypto could be used as a hedge against inflation or recession, doesn't seem like. So the crypto market is also actually, the both asset classes are actually moving the same direction because people are becoming fearful, guys. And I did cover this back in my videos from December, January, February, that 7% inflation at that time was super high. And I was thinking, and I said this, that I do believe that inflation is gonna cross 7 or even 8%. And this is one of the proofs that even slight increase in the interest rates doesn't help inflation straight away. We can see that US actually increased 2 times this year, the interest rates, and still the inflation crossed April highs, May highs. So this is not going to help straight away. And these small increments are really bullshit. And we can see the same pattern in Europe as well. So ECB came out confidently and said that, we are going to fight inflation and we are going to raise the interest rates by only 0.25%. Guys, an inflation of over 8%, or let's say for us normal people who are actually feeling inflation more than even 10% on the commodities what we are dealing with on day-to-day basis, it's not 8% for us. It's more than even 10%. Raising the interest rates by just 0.25% is again BS, in my opinion. But again, if the governments would raise the interest rates to 5, 7, 8%, which I think should be to fight such a high inflation, then of course their monetary policies will backfire on them. We have so much debt. For example, the Fed has a $1.3 trillion balance sheet. So is the European Union. They have so much debt. The European countries have so much debt that they cannot straight away raise the interest rates to such high extents. But this is what happens when you print so much money and you make the velocity of money so high that people have so much borrowing power. And trust me, this borrowing power, and we can see that people are going on vacation, you will feel around that there is no problem in the economy. You are still able to spend money, people are still spending money on vacation, they are traveling. It won't be felt straight away. Same way like the rise in the interest rates will not be counteracting the inflation, same way this recession, what is gonna come, will not be felt straight away. It might take a year or so because there was so much money printed, there were so many stimulus packages that it cannot be felt straight away, and people won't feel that yes, we should be saving money and we should be spending carefully. It will come eventually. And that is my point, that after this inflation, when the interest rates will rise efficiently and effectively, which I don't think they are happening right now in the whole world, not in the whole world. Let's say China is a completely different economy. There, the inflation is not a problem, but US, Western Europe, we are having this problem. And when the governments will increment it nicely to 0.25%, 0.5% is nothing. And it's not going to fight inflation at all. And this is what we can also see in the statement from ECB when they were asked that will it affect the inflation numbers straight away? No. And this is one of the statements from the ECB in charge. So it is not going to happen. Anyways, if they would have raised the interest rates by even 2-3%, that would still not affect the inflation numbers straight away. It would take some time. Plus, this 0.25% will definitely not affect the inflation numbers. So this is what is happening, guys. This is affecting the whole stock market. And this is going to happen. And I do fear, actually for me, this is just an opportunity. The more this pattern sustains, I would be accumulating my position in the businesses which I really believe in. Because for me, this period, which is supposed to be a dark time, which we are gonna enter, it's still not there. I do think and I do believe that stock market will dig deeper into those lower levels, because I do believe that we are entering a phase of recession, and it is a possibility that this recession phase might last up to even 10 years, because recently ECB also mentioned that they are only expecting a growth of 0.3% annually, which is nothing. Germany, yes, I do believe is in a different macroeconomic situation, but still we have so much debt, because Germany is paying a lot of pensions and spending a lot of money in pensions, that they are in such a big debt for paying pensions. Yeah, so I do think that yes, this could be a big problem for Germany. Not a big, but yes, a problem for Germany. But also some assets in Germany might not get affected at all because of the supply and demand. And real estate, in my opinion, might be one of those safe assets. Yes. So anyways, this is the current situation. This is why the market is getting a really hard hit. And this is why I do believe that this could be one of those amazing opportunities, guys, for your lifetime, for your pension, for your retirement. This is the time when people actually invest and get rich. So what I'm doing, I'm not stopping my investment whatsoever, and I'm not trying to catch the falling knife. I am dollar cost averaging each and every single month. So I'm not waiting for the bottom. Yeah. Yes, I do think that we still have a potential to go 10 to 20% further down. And this hole which we are getting into, I am damn sure we will get out of this hole sooner or later. It might take 2 to 3 years, because we do have a recession coming, inflation followed by recession. So this is the time which is quite a tough time for those who actually want to take out their money. But for those who are not planning to take out their money anytime soon, for them, for people like me, this is an opportunity. So anyways, with this being covered, let's talk about one of the stocks which I was asked recently, and that is NIO. So in this part of the video, we'll talk about NIO stock update. So now let's get on to the articles and the fundamentals of NIO. Okay guys, so as we can see at the time of recording this video, NIO is down by minus 9.4%. Yeah, and one of the most common reason, what I already covered, is the fear of inflation followed by recession, and we can see that same pattern in the complete asset class. So we can see S&P 500 is falling by minus 2.9%, Dow 30 minus 2.23%, Nasdaq minus 3.49%, Russell 2000 minus 3.46%, gold by 2.36%, and even crypto Bitcoin by minus 14%. And we can see the same pattern, Euro Stocks 50 minus 3.51%. So we can see that the whole market is bleeding because of inflation fears followed by recession. So this is one of the reasons why NIO as well is a target, because in such situation, every business is getting a hard hit, but especially those businesses who are non-profitable businesses are getting much worse. And NIO is of course one of them, because NIO is not having a positive net income yet. Another reason why NIO could face some more fury is because of its first quarter earnings report. So first quarter earnings report came out and NIO stock was plunging. The company already announced some weeks ago that it had delivered 25,768 EVs in the first quarter. So no surprises there, yes, but NIO's total revenue was $1.56 billion, which was up by 24% year over year, which also beat the estimates. But what the market didn't see coming were the lower margins and bigger losses and a discouraging outlook. Now guys, this part right here, the discouraging outlook, will be common amongst many businesses. Many businesses. The outlook is discouraging. Yes, we have a recession coming up. We have skyrocketing inflation numbers. What do we expect? Yeah, the businesses with no profit, with no profitability will of course have lower margins. Even the businesses which have amazing margins, they will have shrinking margins because of the macroeconomic situations. And NIO for sure would be one of the businesses which will suffer. What happened? Three areas where NIO disappointed were of course the margin. So we can see the vehicle margin is dropping down quarter by quarter. We can see 21.2% was in quarter 1 2021. Quarter 4 went 20.9%, and quarter 1 2022 was 18.1%, and so did the gross margin. Gross margin fell heavily. Yeah, so we can see that the margins are shrinking for NIO, and the outlook also says that the margins will keep on shrinking. But we can also see that this is happening with every EV manufacturer, not just EV industry, but the whole industry. Every business out there will have effect on their margins because of the leftover inventories which even the consumer staple companies are not able to sell because of high inflation numbers. Yeah, and with recession this will become worse. So this will affect every business out there. Yeah, not just EV manufacturer, every single business out there. The only difference would be some businesses who already have amazing margins will not suffer as much as businesses who have already, let's say, 15 to 20% margin or even worse. They will suffer more. But the point is, will these businesses survive? And I do think NIO will survive. That's it. I do think NIO will survive. Why? NIO's revenue is increasing at an alarming rate. NIO's numbers are improving quarter by quarter. And also the shutdown did affect NIO's numbers, but still they beat the estimates. And this is the most important thing. So NIO crushed the numbers despite of the supply chain issues, component shortage, shutdown in China. Still NIO managed to do so. And that's why I do think NIO will survive. And with the top line growing quarter over quarter, year over year, NIO is acquiring an important and big chunk of the EV sector in China. Anyways, so the article further says nearly every manufacturer, including the industry leader Tesla, is facing intense cost pressures. Prices of raw materials and metals like lithium and nickel and key components like batteries have rocketed. Yeah, of course, this is happening in the complete EV industry, and that's why one of the reasons why NIO is facing a decline in the vehicle margin is because of this high offset cost. Yeah, high battery cost, and therefore the company is facing a vehicle margin issue. But NIO's average selling cost is still low, and that is another reason why the vehicle margin shrinked further. Unlike Tesla decided to raise its prices. Other EV manufacturers are raising its prices because of the material cost price, but NIO on the other hand is not raising the price of their vehicles and the product mix. We cannot blame NIO for this. Yeah, the material cost is affecting the margins, and if NIO is still consistent of not increasing their prices, yes, NIO will suffer for a short period of time. But if they have decided this, then they will survive. And we can see from the fundamentals as well, which we'll get onto in a moment. But apart from that, we can see that the company's lowest price trim made up nearly 52% of its deliveries. So we can imagine that if NIO would decline its prices, they would be able to sell more vehicles because the demand is there. The demand is absolutely there. And this is one of the reasons why NIO is not profitable yet. So with NIO's selling, general and administrative expenses, and we will get onto these expenses in a moment, the company's net loss shot up by almost 300% year over year. This is huge, guys. This is one of the reasons why the stock fell heavily, and I don't blame the investors. Investors are thinking of the dark times and they would like to shift their money from such loss-making companies to much more sound, fundamentally sound businesses. And this is absolutely okay. But in my opinion, NIO will survive, and we as shareholders will benefit from these times when NIO is actually suffering. Yeah. For the second quarter, the company expects delivers to rise by 5 to 14%, which is amazing. And it expects to grow its revenue by 10.6% to 19.4% year over year. Both numbers indicate deaccelerating growth, which is, yes, true, because even I expected this revenue to grow up to 30%. So this is deaccelerating, yes. But on a positive note, June should still be a much stronger month. I don't care about this month, this 1 month alone, because I am investing in NIO for long term. But apart from that, we have good news. So the EV makers' numbers may have disappointed the market, but the same cannot be said about its growth for the plans for 2022 and beyond. I don't care about 2022 anymore. I care about what is happening beyond 2022. So NIO is on track to add 2 new EVs to its portfolio: mid-size sedan ET5, which is expected to start in September, and mid to large SUV ES7 to launch this month and start of this August. NIO further says that its gross margin should rebound from third quarter as deliveries are expected to rise rapidly in the second half of the year. And I do believe them because, again, guys, trust us that inflation is not an issue in China. Okay, inflation is not an issue in China. China is in a different macroeconomic situation. So its second manufacturing facility is also on track to start production in the third quarter. Importantly, the company is also working on mass market brand and now expects to start delivering a model for the masses by the later half of 2024, and this is again an amazing thing. So the model will be priced at $30,000 only. So this will be the product for the masses, for the normal public, yeah. And of course they also have their in-house batteries, so this is also one of the big plans. So that's why I do think that NIO is gonna have a good growth after all these dark times are gone, you know. And also NIO is struggling just because people are mixing up NIO with the current market situation, but that is not actually applicable in China, yeah. So NIO actually shouldn't be suffering as a business. Yes, as a stock price, I do understand that why people are selling it, because of course of the regulatory issues in China also, but that eased up, yeah. But now people are actually having fears of inflation and recession. But we have to understand that NIO is not in this economy, yeah. NIO is in a complete different economy, so NIO's numbers should improve, and NIO I do think will become profitable by 2024 and or 2025 latest. Now let's have a look at its fundamentals. So we can see what I like about NIO is that its revenue is rising. Yeah, the revenue is rising amazingly, and this is what I really like. But we can see that their SGA expenses are increasing heavily at $2 billion, and that's why they have an operating loss of over $3.6 billion, and this was a huge loss, so above 300%. But what I do like about NIO is if we go to their cash flow, we can see that they have an operating cash flow of over $1.83 billion. So NIO is actually generating positive cash flow from its operation, guys. This is what should be amazing for us, and this is why I do like NIO as a business, and I do think that NIO will become profitable sooner or later in the coming, let's say, 3 to 4 years. I do think NIO will become profitable, and this is one of the reasons why I think so. Though I do think that their margins are declining, but yes, they are still making money from their operations, from their normal operations. Yes, their SG expenses are quite heavy, which I think should decline after all the supply chain issues are gone and all this lockdown, the extra money which they put for more production is gone, and all these macroeconomic situations once calm down, I do think that they will be able to improve their margins. So this is one of the reasons why I'm still bullish on NIO, because they are not actually making any loss from their normal operating activities. And also if we go onto the insights, we can see that NIO is having an amazing growth. So we can see the revenue has increased by 68.45% in the trailing 12-month period, which is quite heavy. Yeah, the net income has increased by 14.16%. This is, in my opinion, good, but I do expect it to reach 20% in the coming 3 to 4 years. And the free cash flow has increased. Yes, the book value is increasing, and this also tells me that NIO is not going out and it is not getting any bankruptcy issues anytime soon, because also the current ratio, if you can see, is at 2.02, and this is one of the important things, that their intangible total assets only contribute to 0.23% out of this 2.02. So this is one of the things which I really like, that NIO is improving. Yes, one of the alarming situations are about the share increase. So they are diluting us by 7.84%. This is huge, guys. This is one of the biggest red flags which I don't like about NIO. But I do understand, because of their net income being in negative, they are not making any profit yet, so they are diluting us at a heavy number. But I do think that this should calm down in coming 4 to 5 years as soon as NIO becomes profitable. So I do think that this will become even negative. I think they will start buying back their shares when they become positive cash flow and profitable, and they will use this huge cash flow which they are already generating, and they will be buying back shares similar to Alibaba. So NIO will become a huge profitable business, and that's why I am still bullish on NIO for long term. So that's it, guys. I hope you guys like this video, and like I said, these are tough times, but trust me, these tough times create opportunities. So please invest your money into those businesses who are fundamentally strong and you think that those businesses will survive these tough times. That's it, guys. I'm not a financial advisor, but just to give you guys my opinion, this is my personal opinion. So that's it for this video. I'll see you in the next one. Until then, stay safe, stay happy, and ciao.